Now we look at the dramatic fall in Chinese demand for gold. The country's demand is cracking under the weight of record high prices.
In recent months, China has made waves in the global financial and geopolitical arenas with its massive discovery of gold at the Wangu deposit. This gold find, one of the largest of its kind in history, is turning heads around the world, not just for its potential value, but for the broader implications it holds for China's long-term economic strategy. As the world watches, Beijing's actions to increase its gold reserves could have major ramifications, especially for the US dollar's status as the world's reserve currency. In this video, we'll explore why China's gold discovery is so significant, its ongoing gold stockpiling strategy, and the potential global impact. In 2025, China unveiled one of the world's largest gold discoveries at the Wangu deposit, located in the western part of the country. This deposit is estimated to hold over 1,000 tons of gold, an amount that could potentially add hundreds of billions of dollars to China's gold reserves. The strategic significance of this find cannot be overstated. The Wangu deposit not only cements China's position as a global gold powerhouse, but also enhances the country's ability to diversify its reserves, which have long been dominated by the US dollar. China is already the world's largest gold producer, and this discovery further solidifies its role in the global gold market. But the Wangu discovery is just the tip of the iceberg. For years, China has been quietly increasing its gold reserves, part of a broader, long-term strategy to reduce its dependence on the US dollar. As of now, China holds about 2,280 tons of gold. While this is far less than the US reserves of 8,133 tons, China's gold stockpiling efforts are more than just a hedge against inflation. They are a deliberate strategy to hedge against geopolitical risks and currency volatility. Why is China doing this? Let's break it down. Reducing dollar dependency. China has been growing increasingly wary of its reliance on the US dollar. With its massive holdings in US Treasury bonds and trade in dollars, China is vulnerable to US sanctions and economic pressure. By stockpiling gold, China is positioning itself to diversify its foreign exchange reserves and create a more independent monetary system. Hedging against global uncertainties. Gold has long been viewed as a safe haven asset, particularly in times of crisis. In an era of global financial instability, trade wars, and geopolitical tensions, China's decision to increase its gold reserves offers a buffer against currency devaluation, inflation, or potential sanctions. Reducing dollar-based trade. China's growing desire to move away from the US dollar in global trade is another driving force behind this strategy. Over the years, China has taken steps to encourage the use of the yuan for trade, especially with its Belt and Road Initiative partners. Gold could play an essential role in facilitating trade agreements and investments that bypass the US dollar. For decades, the US dollar has reigned supreme as the world's reserve currency, a status that allows the United States to borrow money at relatively low interest rates and maintain control over global finance. Since the end of World War II, the dollar has been the primary currency for global trade, and it's held up by a system established at the Bretton Woods Conference in 1944. Currently, the US holds the largest gold reserves in the world, over 8,000 tons. But while the dollar remains dominant, cracks are starting to appear in the system. The world's reliance on the US dollar for trade and reserves has come under scrutiny in recent years, especially with the rising influence of China and other emerging economies. China's growing stockpiling of gold and its efforts to reduce reliance on the US dollar could have profound implications for global geopolitics and the financial system. The most pressing question is whether we are on the verge of a gold war. One where nations, particularly those in the BRICS, Brazil, Russia, India, China, South Africa, move away from the dollar and toward a gold-backed or gold-aligned monetary system. Challenges to dollar dominance. The biggest challenge to the US dollar's dominance would be a concerted push by China, Russia, and other like-minded nations to adopt gold-backed trade agreements or establish a new reserve currency. This could lead to a multi-currency world, where the dollar no longer holds the same privileged status, disrupting global markets. Potential de-dollarization. China's gold stockpiling is part of a broader effort to promote de-dollarization. Countries like Russia and Iran have already begun trading in local currencies or gold, bypassing the dollar altogether. If China succeeds in creating a viable alternative, it could lead to dollar outflows, further destabilizing the U.S. economy and creating volatility in global financial markets. Impact on U.S. economic power. The U.S. has long enjoyed the benefits of being the issuer of the world's reserve currency. If this status is threatened, the U.S. could face higher borrowing costs, increased inflation, and a loss of influence over international financial institutions. The U.S. could also face a decline in demand for its treasury bonds and other dollar-denominated assets. As China continues its gold accumulation strategy, the global gold market is experiencing significant shifts. The discovery of new gold deposits like Wangu, combined with increasing central bank demand for gold, is driving prices higher. Gold prices have surged in recent years, with some analysts predicting that the price per ounce could rise to anywhere between $3,000 to $4,000 in the coming decade. This would represent a major shift as gold's role as a store of value becomes more central to the global financial system. The outlook for gold is tied to several key factors. Increased central bank purchases. As nations like China and Russia continue to stockpile gold, central bank demand is expected to rise, further pushing prices higher. Geopolitical tensions. In an increasingly unstable world, gold will likely continue to attract interest as a safe haven asset during times of crisis or market uncertainty. The potential for gold-backed currencies. If the idea of a gold-backed reserve currency gains traction, the price of gold could skyrocket as nations rush to accumulate the precious metal in anticipation of a new global monetary system. China's discovery of the Wangu gold deposit, combined with its long-term strategy of stockpiling gold, marks the beginning of a new era in global finance. As China works to reduce its dependence on the U.S. dollar, the potential ramifications for global trade, finance, and geopolitics are immense that we may be entering a time where the dollar is no longer the undisputed king of global currencies, and gold could once again rise to prominence in shaping the world's economic future for the U.S. and the global financial system. The next decade could prove to be a pivotal moment as the gold war between East and West unfolds.